Gold finally looks ready to hand the baton to Bitcoin. Beneath the surface, something big is shifting. Global liquidity is breaking out, volatility is spiking, and yet Bitcoin still sits under-owned, under-allocated, and underestimated. Meanwhile, the US is quietly building a strategic Bitcoin reserve, and MicroStrategy is front-running the world, one convertible node at a time. Plus, we look at some fresh data that shows we may be approaching escape velocity. Stay with us, because we're going to break down the overlooked signals, the corporate war chest strategy, and why this setup might be the most explosive since 2020. It's hard to overstate just how bullish the current setup is for Bitcoin. Let's start with the big picture. At 97K, Bitcoin is only 40% above its 2021 cycle top. And this is after 4 years of inflation, banking failures, and geopolitical instability. And after a volatile start to 2025, with tariffs that led to an all-out trade war, and the complete unwinding of the US stock market, Bitcoin seems to be regaining momentum. Gold has been the safe haven trade of the year, outperforming almost everything and breaking record after record. But something has shifted. Since late March, gold has slowed down, and Bitcoin has started to speed up. And today, that trend has started to accelerate, as Bitcoin is up nearly 3% and gold is down nearly 3%. And as we see in this chart, Bitcoin is looking ready to start outperforming gold again. Last time this happened was in November following the election, when Bitcoin rocketed from 70K all the way to 108K. Historically, when gold hands the baton to Bitcoin, it signals we're in for a wild run. I'm not ready to call it yet, but if Bitcoin overtakes 100K and gold continues to flatline, it might be time to buckle up. Because Bitcoin's supply is now tighter, its holders more convicted, and its macro tailwinds far stronger. The VIX, which measures market volatility, just spiked to levels not seen since March 2020 and December of 2008. Global M2, a measure of worldwide liquidity, is beginning to surge, just like before every prior Bitcoin parabolic run. And now, Bitcoin is still 10 times smaller than gold, but by every metric, it's 10 times better. Despite all of this, the average American millionaire still owns 0 Bitcoin. Just 2 companies on the S&P 500 have any on their balance sheet. And the broader narrative is still that Bitcoin is too volatile, or not ready for prime time. But here's the thing, volatility isn't the risk. Missing the move is. Because price isn't the threat, it's the signal. And right now, the signal is flashing green. One of the clearest signs? The MVRV ratio. MVRV stands for market value to realized value. And it's one of the best metrics to determine if Bitcoin is currently overvalued or undervalued. Today, the MVRV just bounced off the 1.74 level. That's the same midline that historically marks the early innings of a true bull market. In plain English, the market has shaken out weak hands and is now rebuilding strength, exactly like it did before last August's yen carry trade unwind. The structure is nearly identical to the 2024 consolidation phase that ended with a breakout where we saw Bitcoin eventually go from 60K all the way up to 108K. This time, not only do we have ETFs absorbing supply, we have governments accumulating quietly, and corporations are beginning to wake up. And it's not just the private sector moving. Behind closed doors, the US government is already laying the groundwork for strategic accumulation. Senior White House official Bo Hines recently sat down with Bitcoin Magazine, and he described the Bitcoin space race that is just now getting started.
I think that we made it very clear in the way that we structured the executive order that we recognize Bitcoin as being unique. And we've said repeatedly that we view Bitcoin as digital gold. And a question that I get from journalists all the time is, how much do you want? And I think that's really a silly question. That's like asking any country, how much do you want of any asset with intrinsic stored value? You want as much as you can possibly accumulate. There are stipulations in the EO. We must do this in budget neutral ways that don't cost the taxpayer a dime. But as the president likes to say, we have a lot of high IQ people in this administration, specifically over at Treasury and at Commerce. And I'm very confident in the leaders in those buildings to come up with extremely creative ways for us to accumulate. And we're very excited about that. And certainly we want to move as expeditiously as possible to do that. I think that there is definitely a sort of space race as it pertains to accumulation of this asset, no different than there is with gold, right? We're very excited about it. We want to encourage innovation in other spaces in the industry, but I think it's really important that we do recognize Bitcoin for its uniqueness. And like you've described, it's a finite asset, but it's a commodity, not a security. It has the immaculate conception, as David has said, and that intrinsic stored value piece is there. It's been well adopted by the marketplace at this point. I feel like we're well on our way. I think we positioned ourselves to be the Bitcoin superpower of the world, and we're going to deliver on the president's desires as it relates to that.
So where does this leave corporations and institutions? Today, Charles Schwab became the next major financial institution to give the green light for unrestricted exposure to Bitcoin. And as Michael Saylor posted on X today, by the time your financial advisor says it's okay to buy Bitcoin, it'll cost $1 million. When they say it's a good idea, it'll be $10 million. According to Saylor and his company's strategy, the ceiling for accumulation doesn't exist. As long as there's fiat to convert and Bitcoin remaining to buy, they'll keep buying.
Is there a ceiling that MicroStrategy has in mind in terms of how much Bitcoin it can hold? Or is it kind of unlimited and really depends on what is happening in the market?
No, we'll just keep buying, right? The price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And at some point, if we get to 5% of the supply, Bitcoin's probably going to be $1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin. And then if I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth, So our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. And I think everybody's winning if we do that.
This is all-out monetary war. MicroStrategy has shown how to issue debt, raise equity, and turn fiat dilution into Bitcoin strength, all without selling a product. And most companies, they're still sitting on melting cash. As Swan's new CIO Ben Workman said on the Hurdle Rate podcast, building a Bitcoin war chest is no longer optional. It's a question of survival. Companies that wait too long will lose their edge, or worse, get wiped out.
This is about learning from what they did and figuring out how that applies to your future options, how your company is going to be able to operate, and the maneuverability you're going to have to transform in a world that's changing around you constantly. There's not a single company that's above disruption, not one. And so if you don't start building these war chests during these times where innovation is just coming at us faster than we've ever seen it before, you're going to fall behind, and you're going to put your entire company at a disadvantage in the markets. And the minute that disruption shows up at your doorstep, if you've surrendered all the capital that should have been building that war chest, you're out of the game. And I think that's a really dangerous game for companies to play. And it's why I think that most companies need to be really actively thinking about pursuing some version of the strategy. It doesn't mean you have to be in the capital markets raising debt and buying Bitcoin all the time, but make sure you at least take the basic steps to harden your balance sheet and give yourselves a fighting chance for the future here. I think you cannot overlook that step in your journey. And if you do, it's one of the things you end up being remembered for, right? Nobody remembers the people that stripped risk and volatility entirely out of a company until it disappeared off the face of the earth, right? Those aren't the executives that you praise. The ones that you praise are the ones that saw something coming, took decisive action, and built a resilient organization that could withstand threats that come along the journey. And I think that's what Bitcoin treasury companies really are.
This isn't about risk. It's about readiness. Because the minute disruption knocks, it's already too late. So what does this all mean for you? Bitcoin remains the most asymmetric opportunity on Earth. It's early, it's underpriced, and it's being quietly bought by the most strategic players on the planet, from sovereigns to crafty CEOs. The fuse is lit, the window is closing, and the next leg of the Bitcoin bull market may already be underway. Because when the music starts, there won't be a countdown. There will only be supply, and that supply is fixed and finite. Right now it's front-runnable, but it won't be forever. The setup is here, the rotation is real, and nobody is bullish enough. Gold is blinking, the MVRV is signaling, the government is stacking, and Bitcoin is looking for its next big run up. If you want to be more than just a spectator in this next era, if you want a seat at the table shaping how Bitcoin fits into our financial future, there's one place to be. This September, join us in Washington, D.C. for BTC in D.C., the first major U.S. policy forum dedicated to Bitcoin. Swan is proud to partner with George Washington University and BTC Prague to bring together leaders like Michael Saylor, Adam Back, and many more, where Bitcoin meets monetary policy, global finance, and the next chapter of adoption. The Swan private team will be there, and we're excited to welcome clients and allies to the front lines of this conversation. Get your tickets now at btcindc.com and be part of the movement ushering in the Bitcoin era. And quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So in summary, this isn't just about price targets or portfolio performance. It's about positioning for your retirement and for your children and your grandchildren. But I'd love to hear your thoughts on this. Do you think corporate treasuries will finally wake up and follow MicroStrategy's lead? Or will most companies and millionaires stay sidelined until it's too late? Leave your comments below, like this video, share it with friends, subscribe to the channel, and hit that notification bell so you don't miss the next video. Thanks for watching, and remember, TikTok next block.